Should I stick with my W-2 job or branch out into private practice and consider self-employment income or 1099 income? That's a question we get quite a bit. I'm Meagan McGuire, certified financial planner professional and certified student loan professional, where here at SLP Wealth, we work at mid-career professionals who have lots of student loan debt. So typically doctors, therapists, veterinarians, chiropractors, dentists, and we get faced this question or clients get faced this question a lot, whether or not to stay W-2 or to go maybe a contract route. And one disclaimer first, make sure your state doesn't have opinions on who should be a contractor and who should be an employee. You do want to make sure you stay compliant there. But there are opportunities where you could be either, depending on the role that you are performing. So today we're going to break down the financial realities of each option and how they impact your income, your taxes, your lifestyle, and retirement savings, and so much more, so we can make the best choice for your life and your money. Let's first jump into the income comparison. Let's start with income because that's one of the first things that people think about, of course. A W-2 employee, whether you're a hospital employed physician or a therapist working at a group practice, you're typically earning a steady salary for the most part. There's security in that paycheck. It shows up like clockwork. We get paid semi-monthly or bi-weekly or once a month. We know when it's coming. And you probably have benefits like health insurance, disability insurance, life insurance, things like that, which are part of your benefits package. But in private practice, your income can vary. Some months are great. Other months are slower if you're collecting contract income as well. So you really have unlimited earning potential, I guess you could say, looking at it that way. You could set your own rates. You choose how many clients or patients that you want to see. So for example, a therapist working W-2 might earn about $80,000 a year. In private practice, with a full client load and some cash pay clients, they could be bringing in $120,000 to $150,000. Even after overhead. But what is the trade-off there? That on paper looks like, wow, why wouldn't everyone just go private practice? One of the big trade-offs is that you have to find your own clients and you have to manage the business. So you're not only a therapist, you are the accountant, you are HR, you are the customer service representative, you're business development, you might be the treasurer. You are so many roles as a practice owner or a self-employed person. You do all the stuff that a W-2 job handles for you at the end of the day. So that's one thing to keep in mind. And the income growth potential, it takes some time to get there. It takes time to build up your client base, build up your name, your brand. You're going to have to pay for marketing and maybe some expenses there to really get the business off the ground. So it takes some capital maybe up front to get started. But let's talk about taxes and benefits. Taxes and benefits. So as a W-2 employee, your taxes are really simple. You fill out your W-9 at the beginning of the year or when you first get employed, and your employer withholds income taxes and pays half of your Social Security and Medicare taxes. You also typically get the group benefits we talked about earlier, like retirement plan access, health insurance, maybe even student loan repayment assistance or continuing education stipends. But as a business owner, you are paying both sides of the payroll taxes, what's called self-employment tax, which adds up to about 15.3% before income tax. However, you can deduct business expenses, which you can't do as a W-2 employee. You can deduct things like rent, continuing education, software, the materials required to do your job, even part of your phone bill potentially, or your internet bill if you work from home. So that means a savvy practice owner can keep taxable income lower and save money with smart planning. But if you're running your own practice, the structure matters. An S Corp can save you thousands in self-employment taxes if we're making enough income for it to warrant the costs associated with having an S Corporation, because you'll also need a tax professional that's experienced in S Corps and personal taxes as well. You'd file 2 separate tax returns each year. So you have to be earning enough for it to be worth it, but an S Corp structure could be something to consider if you're at that point of income where it could help. And this is where you are deciding what you're paying yourself as W-2 income and what you are taking as distributions. So you have to pay yourself a reasonable salary, which reasonable is vague by the IRS, but maybe look at what other therapists in your area or what other physicians in your area make if they were W-2. How much do they get paid if they got hired directly by the hospital or directly by a practice? That might be some good guidance on how much you should be W-2ing yourself as an S corporation. And then the rest, so any above and beyond that, any profits above and beyond that after business expenses, you can take as distributions. And those distributions avoid the double taxation with the self-employment tax. So that's how it can save us some money on taxes. But you need a tax professional to make sure that you are doing this all kosher and we're good with the IRS and we're doing our structure correctly. So entertain chatting with a tax professional and maybe even a business attorney to make sure you're setting yourself up for success. Let's talk about lifestyle trade-offs. Money isn't the only thing that matters, right? So in a W-2 job, you're working someone else's schedule. You might have to work evenings or weekends, PTO might be limited, but there's less admin work and you usually don't have to worry about marketing or client retention. That's on the company that you're working for, the entity that you're working for. In private practice though, you're in charge. You want to work 4 days a week and take Fridays off? You can. If you want to see clients only in the mornings and take a month off in the summer, you can by design. You work and create the life that you want. But you are also responsible for everything: scheduling, billing, compliance, managing your website, paying quarterly taxes. The flexibility is real, but so is the responsibility. And so some folks decide, actually, I'm not cut out for this self-employment or this business ownership route. I would prefer to be able to, hang my coat up at the end of the day and be done and go home and not have to think about work until I clock back in tomorrow morning, right? So that might just be how you want to think about it from a lifestyle perspective. What do you prefer and what are you willing to take on and manage yourself? So spinning back to finances a little bit, I want to talk about retirement and long-term planning differences here. Big difference is how you can save for retirement when we're thinking W-2 or 1099 or contractor. So if you're W-2, you might have access to a 401k, possibly with a match. This is essentially free money, but I would also like to say it's compensation. It's your compensation that you're getting from your employer. They contribute it to your retirement account, however, instead of giving it to you directly, which is still great. That helps you get towards your retirement goals a little faster. Some hospitals or practices offer 403Bs or maybe even pensions. So a suite of options that you can contribute to or your employer contributes to help you save for retirement. As a private practice owner, it's all on you. You have to initiate opening something and intentionally saving towards your future. And oftentimes, I do find this being something that folks delay on the private practice side because they don't know where to start. They're really focusing on the business. They're throwing everything back into the business, but they've pressed pause on a big scale on their retirement, which could be a bad thing. So what's good about being a practice owner is that you do have a lot of powerful tools at your disposal. You can set up a solo 401k and contribute up to about $70,000 a year per the 2025 limits if you qualify. So that has to do with how much income is your practice generating. You can contribute as the employee up to $23,500 in 2025, and aggregately as you as the employee and you as the employer, you can contribute up to $70,000 depending on your income. So there's a percentage we have to take into account there on how much we can contribute, but it's a pretty big bucket, which is exciting. You can also consider a SEP IRA. That's something that has a lower contribution limit initially and might have some issues with backdoor Roths or coordinating with backdoor Roths if you're doing those. So that might be something to consider, but also caution if you are implementing a backdoor Roth or you want to still contribute to a Roth IRA. You could even build out a defined benefit plan if your practice grows and you want to turbocharge your savings. Defined benefit plans, though, we have to have a very, very, very secure and large source of income coming in on a consistent basis. Because once you set one of those up, it is really hard, if almost impossible, to change at that point on how much is going in and how it operates when it comes to your employees. So it's something you really want to consider carefully, not something to scare you away from it, but just something you want to think about carefully before setting up. So if you're planning long-term wealth, this is where the private practice can shine, but only if you're disciplined and only if you have the right accounts set up for your business structure. So what makes more sense? W-2 or private practice owner, contractor, 1099 income? It depends, of course. Of course it depends, right? But if you value stability, simple taxes, built-in benefits, and you're not really interested in running a business, being all the hats that come with being a business owner, a W-2 might be the best way to go. If you are willing to take on some more risk though, and you want control, you want higher income potential, and you want better long-term tax strategies or long-term retirement planning strategies, private practice could offer greater wealth over time, but it will come, that higher wealth potential does come with a higher work ethic and a higher amount of energy that goes into building that practice over time. It's also not either or forever, right? Some clients start in W-2 roles to build experience and switch into private practice later. Others do a hybrid. They keep part-time employment while building their own business. So in closing, if you are entertaining these options, you're trying to figure out what the best way to go is, and you want help running the numbers, we would love to go through that with you. We help doctors, therapists, other medical and highly educated professionals figure out the best financial path forward based on their goals and their lifestyle. So check out the link below to learn more. Hit the like button if this was helpful and drop any questions in the comments. We would love to see what's on your mind. Thanks for watching, and we'll catch you on the next one.